Oh, right, will do, Morgan. Thank you. Appreciate it. Thanks for the introduction, and also thank you very much for the invitation to be here with you guys today. It is absolutely a pleasure and very much appreciated. I really like this forum. You know, the Trading Pub is just about helping traders, you know, and it's what Morgan set out to do, and I think it's just a wonderful thing. It's a great, great forum and a good format. So I like to be involved when I can, and very much appreciate the invitation. Morgan has mentioned I do serve as one of the moderators, kind of the head moderator, really, I guess, for the trade room at DTI, Diversified Trading, and been doing so for a couple of years now. Originally got started in the business back in '06, and having been in a different line of work actually altogether, sold a business, was looking for something to do, happened to, fortunately for me, actually be from the same area as where DTI is located, and so stopped in one day and I was like, man, this really looks interesting. It suits my background. I graduated with a degree in finance and accounting, and I thought, this is pretty cool. You know, why don't you show me, or can, well, my question was, can you show me how to do this? You know, because I remember one of the first trades that I saw them, you know, trade live was a trade in the Dow, and you know the trade went their way, and everybody was high-fiving, and yeah, this is great, 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 whatever. And I looked, and I was like, okay, that was like 20 or 30 points in the Dow, but what does that mean? I don't even know. You know, with regard to a P&L. So that's how green I was. I mean, the greenest of green, you know. So this goes back to like '06, and I've enjoyed it. I've been at it since. I've been at it from some different angles. I mean, I was in Forex industry for a little bit, you know, managed a prop, you know, Forex operation. We had a brokerage Forex, a couple different angles, and managed a small fund for a little while, and now I'm managing a trade room. So it's, you know, been at it from, like I said, some different angles, but all of which I've enjoyed thoroughly. And so let me ask the question, let me throw it back to you guys. What kinds of markets do you guys tell me, like FS or O, futures, stocks, options? What do you guys trade primarily? What are your likes and wants, wishes? Got some option stocks, FX equities, got futures, got FSO a bunch. Golly, wow. Bunch of options. TF and ES is futures, options, stocks, and options. Okay. All right. So let's do this then. Okay. Now let me talk to the equities and options guys for just a minute. Now, what I'm going to talk about is primarily going to be centered around the futures markets, but I will tell you that you can learn to, and I did. You can learn to the futures markets to help you more successfully trade stocks and options. The futures markets can kind of give you a heads up as to direction and or sentiment. Now think about, you know, for instance, like you know, if you trade Apple and that's your thing, and I know some that do and trade it very, very well, very successfully, and that's their deal, and they trade it, you know, directionally with calls, weeklies, you know, calls and puts or whatever, based on, you know, squeezes and their you know, their method or whatever have you. Then I say good, you know, and don't let me try to throw a kink in your chain, because if that works for you, then I'm happy for you. I mean, that's good. What I think I can show you, though, is a way to use some of these futures markets to, one, to learn to trade, and two, even if you weren't necessarily interested in trading them specifically, like for instance, if you were trading Apple, I could show you how to trade the NASDAQ, or even use the NASDAQ to help you kind of discern direction intraday, moreover, with regard to some of the major makeups of the NASDAQ, such as Apple, Google, Priceline, Amazon, you know, the ones. Options. Okay, so for options, if on the open, which is what I'm going to be talking about, trading around the open, but I'm really going to be talking about primarily trading some of the equity index products, such as the S&P, NASDAQ, DAX, Dow, you know, stuff like that. But you could actually use your options trading and trade. You could trade your options, but trade it around the strategy, or key your entries off of the strategies that I'm going to share with you for trading off your opens, okay? So like if I say, for instance, I mean, you might even trade some of the futures options, I don't know, but if you know, irregardless, you could use this for trading equity options such as, you know, the options on Apple off the open. Use the same tools I'm going to share with you, or you may trade ES options or so, something like that. And if I show you the opening range and how to determine, you know, long or short, and say it's long, well, obviously you could start buying calls or selling some spreads on the other side for, you know, for income. And so, hope that helps. All right, now let me go to the futures traders. All right, futures guys. If I'm talking a lot about S&Ps, please know that I can help you in trading other products based on the information I'm giving you for the S&P. Here's how. All right, so if the S&P moves 10 points in the day and the Dow moves 85 and the NASDAQ moves 20 and et cetera, then what you'll do, and Forex, yeah, we'll get to Forex too. What you can do is this. Do an ATR, average trading range conversion, to figure out where your products should be based on the information I'm going to give you in the S&P. For instance, like we opened this morning in the S&P off the bell. Let me get the exact numbers for you. It's about 33. Yeah, 33. And I was looking for the S&P to trade down to 31. And we talked about it, and it did, and it hung around 31 for like 30 minutes or so. So you say, okay, well, that's 2 points in the S&P. Well, then, if you're a Dow trader, take your 8.5 to 1 conversion and say, well, the Dow should move 8.5 times 2, you know, about 20 points or so. The NASDAQ moves 2 to 1. So if I get 2 points in my S&P, you're going to get 4 points movement in your NASDAQ on average. It's just an average, but it really holds pretty true. The Russell is about 0.8 or 0.8 of 1, 0.8 times the movement in the S&P. So 2 points in the S&P moves the Russell about 1 points. So yeah, still on first slide. I'm just giving you some background, because when we get started, I don't want anybody to feel left out. I don't want you to say, oh, this isn't for me, man. I trade stocks. This doesn't help me, or that kind of thing. What I think, though, I can share with you here today will work for everybody. Yeah, you should be able to see the slides. Everybody should see a green slide. Is that a yes? NASDAQ is 2 to 1. 2 points in the NASDAQ for 1 point in the S&P. All right, so everybody's on the green slide. All right, let me go ahead and start advancing, because I want to make sure everybody can see these slides. All right, risk. Morgan said it a minute ago. I'm going to say it again. Anytime we're talking about trading, we got to talk about risk. In another presentation, we could actually talk about how risk can really help you, and accepting and defining and understanding the risk. But for this purpose, we'll talk about the fact that you need to understand that when we're talking about trading leveraged instruments such as these futures and options, you got to understand that you're dealing with leverage, which is a good thing if known how to and used responsibly. But you got to understand that you could literally actually manage to lose more money than what you even have in your trading account trading a leveraged product such as an S&P contract. For instance, a notional value on an S&P contract trading at 1,400 times 50 is about a $70,000 contract that you're afforded the luxury and the ability to be able to trade during the day, intraday, with most discount brokerages for somewhere between maybe $500 and $1,000 worth of margin requirement. That's pretty good leverage. That's somewhere around, on average, we'll call it 100 to 1. So this is a good thing as long as you know about it and know how to use it properly. It can be a bad thing if you get carried away with it and don't understand the risk. And so risk in trading, bottom line. And we're going to talk about risk too. I'm going to make sure you understand the risk, because it's very important. You'll understand the risk associated with any trade setup that I show you. Very, very important. So I thought the title here, Insightful Tips for Trading on the Open. When I say the open, here's the deal. I'm not talking about the futures market open today at 5 o'clock, which is when they will open. I'm talking about the cash market open in the morning when the equities trade and start to trade, and you guys with your options and everything, okay? The Forex, I'll tell you, you might be just as well suited to actually trade it on the, sure enough, the real open, on the Forex markets open. I haven't employed this strategy really terribly much in the Forex markets. I trade the Forex markets differently. I trade them on a much higher time frame, 4-hour chart, as a matter of fact. And so I'm talking about the U.S. Cash markets open at 9:30 Eastern, 8:30 Central. All right, 8:30 Central Chicago time, 9:30 New York time, U.S. That's the time that I'm talking about trading around. All right, so please make sure too you got pen and paper, because you're gonna want some notes. There's no way I'm gonna ask you to try to remember all this, because one, you only got about 30-45 minutes. I'm gonna go through probably 40 slides, and so we don't have. You're gonna need a notepad, I'll tell you. It's with or without, it doesn't matter, daylight savings. It's just, the market opens at 8:30 Central. It just does, and 9:30 Eastern. So first thing you want to do, and I tell, this is, you can go to numerous places to find out about news and whether there's news to be released during the session at which you're trading. I recommend these couple because they're free and they're good. And so note these two right here, Forex Factory and ForexPros.com. You can go to these places and you can find out whether there's news at the time in which you're interested in trading. If there is, and it is a red star event, or in Forex Factory it's got a red folder, but nonetheless it's color-coded, red meaning high impact, well then beware. And hey, if you want to trade news, which I do, then that's cool. But if nothing else, at least be aware of the fact that there's news, because here's what can happen. I am, by the way, not cherry-picking charts. This is the chart on a 30-year bond future at 7:30 in the morning on the very last GDP report, and it trades from a 148 to a 147 handle in a 3-minute chart. And if you were short, that's obviously a good thing. My point is not that. My point is that you need to be aware of the fact that there was news this morning. It was GDP, and if you're trading various products, you need to know what news is going to affect the products that you're trading. For instance, this would affect the pound-dollar pair, the euro-dollar pair, the euro-yen pair, the Aussie-yen pair, the bonds, the notes, all the equity index products, etc., the DAX, the Euro stocks. So you need to know, if there's news, and if so, what is the news and what products is it going to affect. If you're a futures trader, you know generally what products, and if not, then if you're equities, then you're not worried about this anyway, because you're an hour to the open anyway. Because this is generally big news like that's at 7:30 in the morning. All right, so you know now if there's going to be news. All right, good, fine. Now, here we go. If we're to open this morning like we did at 14, say 33 in the S&P, then you're asking yourself this question. And it's not to be like immediately to the very tick or to the point, but you're asking yourself this very general question. Are we going to open, essentially, are we likely to open this morning inside yesterday's range or outside yesterday's range? In other words, because there's different scenarios that set up. Inside yesterday's range, you start looking for targets such as the daily pivot, yesterday's high, yesterday's low, these types of things. If it's outside yesterday's range, you're starting to look at, well, is there a gap fill scenario that I can, is it something like that? That type of thing. So in general terms, all I'm saying is simply this. Let's take a step back and look at, the forest and not miss it for the trying to concentrate on that single rightmost candle on the hard right edge of your screen, and you can't see anything but that because you're so wrapped up in that price action. And that'll, it's not a good thing. I think that you take a step back for a minute, you ask yourself, where are we in relation to where we've been trading? The market's trying to tell you something. It's telling you, hey, look, we're dead smack in the middle of yesterday's range. We're basically right on the close from yesterday. We're not in a hurry to go anywhere. We're waiting on the Fed today, which is exactly what the market was doing this morning. Open 1433, didn't do anything until the Fed came out at 11:30, the FOMC, the statement, and then it moved, right? but it was, I mean, we knew not to expect much, and in the face of big news like that. So the next thing that I do, and this works for me, and I would encourage you to consider this, is you write down the big key numbers that you're going to want, and the answer to the question, well, why, is simply this. These numbers that I'm going to ask you to consider noting and writing down are going to be, they're going to be your targets off the opening range that I'm going to show you in a minute. But these are going to be your targets. And the question is, where do you get Globex high? Well, if you're futures products or whatever, it's just going to be the overnight high. Just look at a continuous 24-hour chart. Depends on who you're charting with. Like for instance, charting with Ninja, like I do, you just put the definitions to include extended trading hours, and then you can, if you wish, once the open, set the definitions back to regular trading hours or whatever have you. But I like to know what the overnight high was as well, because there's a very high probability, a very likely and strong tendency for the market to test one or the other, the Globex either high or low, so it's a good number to have. Anything that really jumps off the chart at you, like it's just like if you look at today's trade and you see that there was a huge major pivot at 1432.33. Well, you write that down because it's just literally jumping off the chart at you. It'll become important. And the reason you're going to have these is because it's these are going to be your targets in a minute. All right. Now here's what I think is probably worth being here today for right here. This is something nobody does, all right? I mean, ask 10 of your best friends in trading or something. I guarantee you they're going to shake their heads and go, what are you even talking about? Nobody does this, all right? Not many anyway. If there was earlier, if at 8:30 Central, 9:30 Eastern, the cash markets are opening and there was news earlier at 7:30, like that GDP that I just showed you, it's a good thing to look back at the 24-hour chart and find out, what did the news do? What pivot did it create? What range did it trade? For instance, this last GDP traded 1402 pivot up to 1410. That 1410's been important all the way up into and including, right now. It was only just the other day that we finally made it through 1410 and started to trade higher, until literally it was like yesterday, the market's sitting and married to the idea that 1410 is this, this heavy overhead. And so if there isn't, the point is simply this: if there's news earlier, then get the pivot and write down anything significant that you see, because that news creates pivots that are important in the upcoming session. On the bell rings, give it a couple minutes. Reason being is this: all that market on open stuff is flooding into the market, and it is creating, if you can learn to identify, I'm going to show you basically the simplest way I can show you in a 30-minute presentation, but it'll identify for you a what's called like an opening range, an opening swing. And that high and that low of that opening range is your support and resistance for the first trade opportunity of the morning. And I will tell you this: I've done a lot of study over hundreds and hundreds and hundreds and hundreds and hundreds of trading days in order to figure out that on average the S&Ps, and here's where you need your notes, the S&Ps are going to put in about a 2-point range, and wow, isn't that amazing? And they did this morning, 33 by 31, 2-point range, right? The S&P's put in 2, that means the Dow puts in 8.5 times 2, the NASDAQ 2 times 2, the Russell 0.8 times 2. You do your conversions in order to figure out whichever markets you want to trade. But the S&Ps are going to put in about a 2-point range, and it's going to take, and I'm going to say about 3 minutes on average. Sometimes it's 2.5, sometimes it's 3.5, but it's going to take about, on average, 3 minutes to do so. All right. So what really is happening behind the scenes is you get an opening print. Like this morning, it was 30. It goes up and puts in a high, whatever that is. This morning, it was 33.5. It goes down, puts in a low, whatever that is. It was 32, or 31.75, and it comes back up in 33. And that's when you've got your range. It's crossing the open, and it's putting in a pivot, high and low. What I'm sharing with you is about 1,000 days worth of sample and study to come up with the answer that it's going to be about 2 points in range and it's going to take about 3 minutes to do. So what's the easiest way to look at this? I'm going to tell you, just populate. If you want to do it the hard way, look at a volume chart, because you'll watch it. You'll watch the price action flow. If you want to do it the easy way, and I've got a bunch of charts here for you, pull a 3-minute chart, because on average over all these days, I'm telling you, it's going to take about 3 minutes. All right. So you can use the opening range, high and low, as support and resistance. Once that range is breached by 2 ticks or so in the S&P, and do your ATR conversions for the other markets, but about 2 ticks, that's the direction you want to be leaning. And I can tell you, at the end of the day, I can tell you this: it'll work successfully for you about 80% of the time. In other words, there's one day in the week that you're going to get chopped up. But 80%, if you can find anything in trading that works about 80%, then that's not a bad thing. All right, so let's go through some charts, and I'm just going to walk you through like a week here. I'm just going to walk through some successive days and see how this plays out. The calculations, yeah, I sure can, yeah. At the end, I'm going to give you a link, and you're welcome to come in the trade room later tonight, and we're doing a thing tonight. We can spend more time. So right now, okay. So here, okay. Let me grab a dot or something so you can see. All right, I'm going to point with this little dot. All right, right here is the end of this day. It ends right here, and then we open gap up. File this one away while you're watching all these charts. Just note that these situations seem to be the ones that really just turned out to be the sweethearts. All right, it's just a sort of an observation. This thing works no matter what, but those are the sweethearts. All right, so here's what we got. We got end of the day. We got to open up here. We got an opening range. I've just put a 3-minute chart, okay, because I've gone through the whole explanation as to why 3 minute. I'm trying to make it easy because we're pressed for time, so it's a 3-minute chart. The range is breached to the low side here, and the trade is on. Look at here. First target becomes prior session high and prior session close. The key numbers, remember I told you to write those down. Yesterday's open, high, low, and close. Today's pivot and first tier support and resistance. Those are targets. Those are your targets. So anyway, first target I did with the little blue dot right there. That's yesterday's high. Second target, yesterday's close, and etc. So there's one example, and I'm going to show you some losers here too, because we're going to have to. It's very important that we understand, the ones that just don't work. I don't know where the prior session is on this, but I do know one thing. These lines tell me something because I have all my stuff color-coded. The white means open, magenta means high and low and close of a prior session. So I can tell you this, that we're opening inside yesterday's range, and the trade goes on to be this. It obviously, you can see, breaches the low without breaching the high. This is the next day too. You see the dates. It's the next day. All right, so it breaches the low, comes back up, tests the low, refuses it, goes down, target. What's the target? Right there. That is the day first tier support, and I know that because it's in a gold color. And like I said, everything on my charts is color-coded. The lines, the whites are open, the golds are support and resistance, reds are pivot, magentas are high, low, and close. So I just see it go straight to a level, and I know since it's color coded, it just says to me what it is, So anyway, trade goes short, goes to target, and that's what target. That's why I called that target, because that's what that level is. All right, the next day, what happens? This one actually opens very much inside the prior session range, and note, this is not such a sweetheart of a trade. It's just not such a, it worked, okay, it worked, but it wasn't a real sweetheart of a trade. It opens inside yesterday's range. The reason for that is when you're inside and right on close, you're basically at balance in the market's just like, whatever, we're just doing what we're doing. It's not really in a hurry to go anywhere. The point here, though, it does open, it does breach the high, it does go to red, which is pivot, day's pivot. Question is, how are they calculated? Prior session well, your charts will do it for you, but the math behind it is this. Prior sessions, high, low, and close, add them up, divide by 3, you get pivot. From there, there's a calculation that gives you support and resistance, and it's like pivot times 2 less yesterday's high, something blah, 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 whatever. I don't even know what it is. It doesn't matter to me because my charting package populates it for me anyway. But pivot comes from yesterday's high, low, and close, add them up, divide by 3. And but I mean, any charting package will give them to you. It's just an industry standard. All right, here we go. We open out of range. Okay, we breach high, and this one goes straight to target, which is prior session close. It comes back here, reevaluates support. This should speak volumes to you right here. This is how important this range is. It comes back down and looks at the range again and said, "Ooh, wait, that is support right there. That was resistance. Now it is support. Okay, trade is on. Boom, goes straight to where? Daily pivot right there. There's daily pivot right there. But this should speak volumes right here. It goes to the gap. It comes back down. It says, wow, look, that level is pretty good, and then goes to daily pivot. Let's get some bad ones here. Oh, here's one that made you a little nervous. This was a 1-tick breach. That's why I say you need 2 to trigger. This one opens, goes and breaches the high by 1 tick, makes you think, I guarantee you, I'm thinking right there, I'm getting long. It's just a matter of go ahead and complete the setup for me, and I'm getting long. Short and goes right to target, prior session close. Goes to next target, prior session low. Right? I don't understand the question about do I sell at the pivot. I don't understand that question. I'm sorry. Yes, it is being recorded. Morgan always records. And so Scott, help me a little bit on your question. Okay, so here's another one. We go right dead smack to the high, to the very tick. I guarantee you, you're thinking you're getting long, but it goes right to the high. It says, wow, that is really good resistance. It breaches the low by 2 ticks, and the trade is on. Where does it go? Prior session close, prior session low. I mean, are you kidding me? This stuff just keeps working and working and working and working. But I'm going to show you some that didn't work. And it's going to happen. I'll tell you it's going to. And here's one that did not work. Here's a good one. Okay, here's one that did not work. Here's where you know you're in trouble. All right, we open, you get the normal range. That's about a perfect range right there. You get 2-tick breach of the high, and then boom, you're stopped out. 2 ticks is a half a point. Yeah, 2 ticks is a half a point. So this one, here you are about 6 minutes into a session, and you are stopped out for about a 2 to 2.5 point loss. Now, here's a good time to stop and talk about risk. This is why I tell people strategy is not for everybody. Because if you're the type, and a lot of people are, that where you get stopped out, you're 5-6 minutes into a session and you're stopped out for your first loss, if that ruins the rest of your morning, then please don't do what I'm showing you here. There's a better trade that's coming up at 9 o'clock I can share with you. If you're the one to get upset about getting stopped out just 5-6 minutes in, and that ruins the rest of your morning, this is not good for you. Because this is what is going to happen on average about 1 time a day. You're going to get hit for about 2.5 points right on the open. And if you're sitting there frustrated, worried about how do I get that money back, then that's not good. Here's another trade that did not work. This one triggers long, and about 3 minutes later, boom, you're stopped out for a loss. Right? So this one did not. About 80%, Rick. It works about 4 days out of the week. And what I encourage, okay, Rick's question, how does it work, or how often? I always say this: prove it to yourself. Just take the information that I'm giving you, the knowledge that I'm giving you, and go back on your own charts and look and see, wow, that did work. Oh, look at there, it got stopped out over a week, and you'll find that about 4 days it works. 1 day you're going to get stopped out. Then sim trade it for a while to make sure that you like it. You know what I mean? And that it works for you, and that it's then you're okay. Then you're okay to actually try this at that point. But here's a bad one. Here it triggers long, boom, stopped out. All right. One thing I can say about this is once it did actually breach the low of the range here, it really took off to the downside, reiterating and confirming the fact that you know that that range is that important. All right, it's really that important. All right, let me go back and see what I've missed. How many ticks do I like for a stop loss in the ES? 6 or 8, depending on the trade and what the chart's telling me I need to do. 6 or 8, though. Usually about the question: do I reverse when stopped out? Nope. No. No, I'll wait for it to breach. It's got to breach that range, and once it goes, say it signals long, and then it comes and it triggers short, then I'm stopped out. So then what I'll do is start to wait to see if I can actually be short in that case. Figuring obviously I had the direction wrong off the bell. Uses 30-minute range parameters you mentioned here. Okay, some services use 30-minute range. Okay, yes, I do too. The question about some use 30-minute range based on what my opinion. Okay, let's take that question to this slide, to this next slide. I say the next trade opportunity is at 9 o'clock, and that is 30 minutes in, because 8:30 Central to 30 minutes in is 9 o'clock. What you're going to find is that range on the S&P is going to be 4 points on average, 4.5 points in range. All right, that's a perfect range. So what you'll do is you can buy a break of that high, or you can start assuming, and establishing a position once a long position once, you've got a breach of the high or a short breach of the low, either way. And add to this when the market comes back into retracement, which it often does, and assesses, for support at the midpoint on that bar, your stop goes the other side of the bar. And you're going to find that range to be about 4 points. You're going to find that risk to be about 2.5 points. Okay, 2.5 points. Morgan will help Rick with that question about how to get in. I don't know. I truly don't know. And then 2-tick thing again. Yeah. Okay, Larry's question about 2-tick thing again. All right. You're going to find the range on the open to be about 2 points wide in the S&P, and it's going to take about 3 minutes. What I'm saying is this. I call it like a 1-tick fluke. Anything can happen 1 tick. I mean, just it's nothing. It's meaningless to me. So what I'm saying is, if you get about a 2-point range, and the high is 33, and the low this morning was 31.75, I knew to be short at I'm sorry, it was 33. I'm sorry, 33. I knew to be short 2 ticks below that 33, and to target 31. Okay. And there's 4 ticks in the point on the S&P. 4 ticks. The range on the open this morning was 33.75 by, or 33.5 by 32.75, meaning break of that, and you're short, and you're targeting 31s in that case. Okay, so let's see. We probably won't really get finished. I'm going to probably have to invite you guys in the room, and we'll finish up there or something, because let's see, how long have we been going? About 30 minutes or so. Okay, so please explain the 4-point thing. It's an average over literally hundreds and hundreds, probably 1,000 days worth of sample of the range of the market movement in the S&P for the first 30 minutes of trade, and I can tell you it's between 4 and 5 points on average. I can tell you a lot of things about the S&P. I can tell you that that's going to be about 60% of the range of the next 30 minutes making up the first hour of trade, and that when you get a first hour's range, it's going to be on average 6 to 8, and I call it 7, and there's another trade that sets up off of that. But what I'm saying is, on that first 30 minutes, you're going to see about 4 points in range on average. 4, 4.5, even 5's okay. 4, 4.5 points, whatever have you, it doesn't matter. And so that's where that comes from. Okay, and not in and out on the halves and holes. I will not run a protective stop on a half or a hole. I will not run a protective stop on a half or a hole. I'll get in on a half, taking somebody else's money. Somebody else doesn't know that rule like you do. That's a good rule. But I do not get in. I don't put a protective stop on that. Okay, so the question is, what is the opening range is more than 4 to 5 points? No entry? Well, say it's like 6 points. Well, the risk is too great for me. So how do I do it? The market says I want to go long. I still want to participate. I know that the market's going to rotate around 2.5 points. So when it triggers long, I'll come 2 points behind it with a limit to buy it. I'm not going to take the breakout trade because the risk is too great for me. So if the range is 6 points or so, then I just come back and buy it on a 2-point retracement. The question now is, how long do you stay in the trade? Off the open, this trade's good for the first 30 minutes. That 30-minute trade right here that we're looking at is good for the next 30 minutes until 9:30. 9:30 sets up a whole nother trade opportunity. And let's see what else kind of stuff we got. Okay, here's the picture of the 9 o'clock trade. This blue bar, this is our software that we use. It's called the Roadmap software, and this is a chart right here. It's called the compass. And what it's doing is it's giving me a lot of information over here, actually, by the way. But what it's doing is it's telling me that the high of my reference bar, this is a 30-minute candle, is at 96.5. And so at 97.75 or so, you could do 96 even quarter. We're long. Get long. I mean, it's a breach of the high of that bar. The bar is certainly within check. Look at the range. It's 94 by 96. I mean, that's a 2.5, like 3-point bar. That's perfect. I love this. The risk is the other side of the bar. So I mean, this is like too sweet. So you get long off the break of the high. If this was, say, a 5-point bar and it's still set up like this, I'd come 2 points back from the breach of the high and buy them on limits. And the targets, the targets are laid out for you in our software. I mean, it's just laid out. Software does all the work for us as far as giving us, the targets based on the average trading range. Here's a deal that I learned by somebody told me this, man, a long time ago, and they sent me a chart which I'm going to share with you in just a second. And it's like, I couldn't figure out for the life of me what I was doing wrong at 11 o'clock in the morning, but I can tell you this. If I was standing in front of the broadside of a barn, I couldn't hit it with a bat if I was, at 11 o'clock in the morning, I don't know what it is, but I just don't see the market very well. So finally, it's brought to my attention, this is some years back when I was still trying to really kind of get my footing, that, the volume really dries up. Things are just not, the same as they were on the open with the, with the volatility and the participation, the volume participation, et cetera. And, it's just time. European cash markets just closed at 10:30. It's 11 o'clock in the morning. People in New York are, it's 12 o'clock. They've been at work since probably 7 o'clock. They're hungry. They go to lunch. I mean, people shut down the trading platforms and go to lunch. I suggest you do the same. Here's a chart. Here in the gray bars right here, this is U.S. Chef pair on a 100-tick chart, right? There's a 12 hours worth of trade right there on a 100-tick chart. You can see there was not much that happened right there. Look at the next 12 hours, though. It's 12 hours, and look at all that trade, and wouldn't you know it, if you look at the timestamp on the bottom of the chart, 11 o'clock, when it starts to dry up again. There's all that trade, and it dries up at 11 o'clock. So it's just a picture's worth 1,000 words kind of thing. I'm just saying, at 11 o'clock, I'm ready to shut it down. I'll come back, since I've got a job to do, I'll come back and trade, 12:30 and again at 2:30, because we trade various trade zones throughout the day. But and we do have strategies for the close. Yeah, yes, I do. How do I calculate targets without the software? I gave you the targets earlier that back in those charts. They are these. They are yesterday's open, high, low, and close. Depending on the scenario, I mean, you have to be able to identify that for yourself, depending on whether you're trading, say, 3 points away from daily pivot. Well, daily pivot's your target, right? Trading 2.5 points from, say, yesterday's close. Guarantee you that's your target. So it's yesterday's open, high, low, and close, today's pivot, and first support and resistance, Globex high and low. Those are targets. That's all you need. I mean, and you want, if you want to get to where, like, this type of, figuring, well, this software does it for you. What it's doing is taking the ATR, and it's the current open time of day, and it's given targets. Be long off of this reference bar. It's telling you to be long right up in here, and then with a target of 1412, and it knows all that based on what the ATR is and the current time of day. But what I'm telling you is, if you don't have the software, you could do it by, you could figure some targets. At least you could figure out some targets. All right, well, we've been through a bunch of questions, so I don't know how much time I need to spend here, but let's see if I've got any more that I haven't. Let's see. Yes, it works for other indices, absolutely, yes. But what you can do is just use the ATR conversions. Or remember, I told you the S&P is going to be 2 points in range, and if that's true, then the Nasdaq's going to be 4. The Dow's going to be 8.5 times 2. The Russell's going to be 0.8 times 2, and you can use this to trade all those other products. All you got to do is figure out what the opening range is, and if it's breached the high, be long. Start buying SPYs and calls and selling put spreads and all that kind of stuff. I mean, you know what I'm saying? I mean, that's why I'm saying it doesn't matter if you want to trade weekly options or if you want to trade equities. And listen, Apple. Watch Apple tomorrow morning. Watch it open and trade for 3 minutes and then reverse. I'm telling you, I'll go ahead and tell you today that that's what it's going to do tomorrow because that's what it does almost every morning. It's pretty wild. All right. What we do at DTI, we teach people how to do a lot of this stuff. We trade all day long. We get up in the morning early. For those who want to trade early at 5 o'clock in the morning and trade for a couple hours, we trade off the bell at 8:30 Central until European cash markets close. We trade after lunch. We trade the close. We come back and we're going to be in the room tonight at 7 o'clock. I'm going to give you a link for that too, by the way. Let's see. For tonight, here's for tonight, where you can just come in and join us tonight at 7 p.m. Central. That's for at 7 p.m. And there's no cost or anything. You just come in and enjoy Tom. Tom's going to be in there at 7 o'clock tonight. He's the guy that started DTI, and he's the guy that taught me how to trade, and he's the guy that's going to be able to show you all kind of stuff here tonight at 7 o'clock tonight. And what we try to do is make sure you guys have the right resources to be able to make trade decisions. It's really pretty simple at the end of the day, long, short, or out. And if you can figure out that this swing trade that I'm giving you, and it's going to be long, well, take short and throw it out the window, and decide for yourself if you want to be long or out. That kind of thing, long, short, or out, and that's what we're trying to do. We have a trade room that is open literally, like I was just saying, 24 hours around the clock. As long as the markets are open, they're closed. The trade room's closed on Saturday because we can't find a market that's open on Saturday. And I think what makes it valuable is some of the expertise. I mean, there's Tom's in there, our 30-year market veteran, Tony Laporta, another 30-year market veteran, Charlie Finn, one of the finest options traders I've ever seen. There's Dr. Frank Stanley, a clinical psychologist and trader, and teaches a trading psychology course, which everybody needs, by the way, I think. Jeff Smith, our chief instructor at DTI. There's all kind of, I mean, it's just all limitless resources in there. Usually a couple of few hundred, maybe 300 some odd people in there sharing trade ideas. I think all that pretty much tells you kind of what makes it valuable. The guidance that you get, I mean, I'm in there calling trades left and right all day. Tom was in there calling a bunch today. He got them long at 32 on the S&P on the Fed thing today. So, that was a pretty big hit there, honestly. We had people in there from all walks of life. There was a guy in there today who's 25-year veteran Series 3 X4 trader, and he's in the room offering, advice and commentary and this and that, whatever today. So, I mean, it's traders helping traders, I'll tell you that. This is what the software that we project during the day. It's our proprietary software. You can certainly have you can certainly purchase a license, but I mean, it's definitely available for sale. But we project it during the day so that you can actually benefit from this without having to actually buy a copy. And we project that during the day, all day. Like I said, open around the clock, 24 hours a day. I don't like getting into performance, but I will say this. We have a student that actually keeps this performance for us because we log the trades in a what's called a whiteboard. And this is a student that's doing it. I'd probably refuse to even project this slide if it was a staff member, but it's not. It's a student. And what he's come up with is the results based on one contract. One contract, futures trading, and any equities trade that we call in there is 100 shares. So if we buy Apple, it's 100 shares, and if we make a buck, then we note a $100 profit. If we do S&Ps, it's a one contract trade. I don't know many people that trade one contract, but I will tell you this, that you could take these results and multiply it times however many contracts you want to trade. But anyway, and past performance not indicative of future results. You know, this risk thing is obviously very, 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 very important. There is a question here about minimal investment, is initial investment to start. I mean, I think you need reasonably probably at least a $5,000 trading account to trade futures. To be honest with you, you really probably need 10, but I know a fair number of people that do start with a $5,000 account, trading account. In answer to your question, just simply as posed, see, I said what I think, but I'll tell you this, in order to open an account like 3T Futures, I think they would require $2,500 bucks. $2,500. I'll tell you that I think that you probably should maybe have 5,000 bucks, but I think that you could. But 25,000 is for equities. Yeah, equities. Yeah, I trade through news. Absolutely, I love the news. I called a crude trade on news this morning. Pivot was 86.70. I said it should trade down to 86.20. It went down to 86.12. So yes, I trade around news. All right. Trade room deal, trade room package, and here's how you can get involved if you want to. Like I said, you can come tonight at 7 o'clock, and there's no charge for being in there. We'll be in there for a couple hours tonight. But we put together some packages here so that anybody that wants to go ahead and get involved with DTI, you can do it, and I'll make available this to you right now. You can go ahead and get 12 months in our trade room if you want to. There's another one coming in a minute where you can get a quarter, but you can get 12 months if you want to. DVD on stock placement, picking winning stocks, and we're going to go through like the Compass Stock Box program where you plug in your stock and your stock like Apple, whatever, Google, whatever, and it'll show you how to get long, where to get long, and remember what the target is, that kind of stuff. The Night Owl session with Chuck Crow, I told you about that. That's homework. That's where we do the homework. We come up with the numbers for what we're going to use to trade the next day. Early Bird, Tom Busby, founder, CEO, DTI. He comes in about 5 o'clock in the morning and trades for a couple hours, and you'll see all kinds of trades in there, NASDAQ, DAX, gold, bonds, S&Ps. I mean, you name it. He's trading Early Bird. You never know what he's going to pick. I mean, he just trades all kinds of stuff. It's really pretty cool. The penalty tape actually is something that I think everybody should see. You can probably catch one day when we play it in the room, but I'm telling you, it's really good. It's about, you know, kind of getting yourself back in check after you've had a series of unsuccessful trades that aren't really going your way. This seasonality thing, we're in it right now. November to April, best 6 months of the year for equities, okay? We're in it right now. We're looking for winners right now in the equities markets. And then Green Trader Tax does a taxes for traders thing for us, showing people how to kind of set up their you know, taxes or whatever for if you're a full-time trader, how to get some of the benefits of that. So that's about $1,000 for that, but that's a year in the trade room. I mean, I don't know, what is that, like 85 bucks a month or so, something like that? I mean, I don't know, probably made 8 or 10 times that today. So, you know, that's kind of silly. But anyway, it's about $1,000 for a year. It's like 85 bucks a month. It's like it's really kind of a giveaway. Okay, you can call us here. Go ahead and write that number down if you want. I'll also, what I'm going to do is post a link. This is what, I'm going to post a link for what I just showed you. And I'm going to show you something else here too. That's a kind of a lesser price point. We got something on a little bit shorter time frame as well, and it's for a quarter in the room. So it's kind of, we call it like a stocking stuffer. It's kind of cute, right? Because it is Christmas. So what are we going to do for there? All right, it's kind of the same sort of thing. You get some of these how to trade the DAX. This 401k management thing is something that I told Jeff we should have for sale on the website. It's amazing. That presentation on 401k management was one of the finest presentations I've seen Jeff do. This is 3 months in the room, and this DTI Traders Club does a few things for you, actually, some really cool stuff. It gets you pre-approved for financing and tuition assistance, all kind of cool stuff. Gets you a roadmap profile with one of our consultants. It could be me, doesn't matter. One of our guys that can sit and kind of go over your trading with you and help you stay on the right track. And a DVD on using futures. Here we go. So remember I said earlier, using futures to trade stocks and options. That's what I was talking about earlier. These futures markets, I mean, listen, everybody should have a futures account, period. Even if you don't want to trade it, you should have one. I'll tell you why, if nothing else. Because if you wake up at 2 o'clock in the morning and you got a 6 or 7 figure portfolio in the market and something's bad in Europe, you're going to wake up to a haircut, but you don't have to. You could hedge with one S&P every $70,000 in equities that you've got invested in the market. And you don't have to wake up to that headache. So I'm telling you, everybody should have a futures account. Even if you don't really actively trade it, you should have one. Just for, if nothing else, insurance. And how to trade global markets? We use the 24-hour markets. We look to what did Asia do last night? What did Europe do last night? How did they close out? The DAC, CAC, FTSE, how did they do? And then how are we coming into our market? There's a guy named Colin Keena, 3T Futures. He can help you. But like I said, even if if you're not going to trade it actively, I think everybody should have a futures account. Even if it, like I said, you're just going to use it to kind of be able to hedge yourself one day if you need be. All right, that deal, like I said, that's for like 3 months in the room, so it's not such an investment. You can stick around for 3 months, and believe me, I know what you're going to do after 3 months. You're going to say you want to stick around for the rest of the year. But there it is. It's only $300. I think that's a pretty good deal. That's for a quarter, a quarter in the room, so about $100 a month. And you get all that other stuff with it too. You'll learn more than $300 worth, I think, the first week, by the way. And you can use that second link I posted for that one, or just call us. There's people still here. We'll be here till 5:30, 6:30 something tonight. It's only 4:30 Central right now, so you can call us. And the two strategies I talked about were, one, of 3 minutes called the opening swing, opening range or opening swing, and then two, that first 30 minutes, we call it a reference bar. Why reference bar? I like this question. This is good. Why reference bar? Okay, we call it a reference bar. We have 4 reference bars during the day. Reference bar number 1 is going to start in just a few minutes when the market's actually open, the future market's open. Reference bar 2 is at night when most of us are asleep and the European cash markets start to trade. Reference bar 3 is at 8:30 in the morning Central when the U.S. cash markets start to trade. Reference bar 4 is that post-lunch doldrum low volume trade that comes back in at 12:30 in the afternoon. So it's called the reference bar trade. And then there's another one at 9:30, but I didn't have time to get to it. That's it. That's the slides. Hit me with some questions if I know some people have already. Usually you get about 30, 45 minutes of people's attention, and then it's kind of like people start to fade out. Well, there's some people already started saying, "Okay, see you, thanks," or whatever. But if you're still here and you got questions, let me know, and I'll stick around for a few more minutes, and then we'll kind of wrap it up. Opening range for crude. I don't have studies on crude, but I will look for you real quick. But I don't have studies. I like studies where I can go back and really prove my point with averages. I mean, real averages, and real history. $87.06 by $86.94 is about 6, and 6 is 12. It's about 12 ticks is about a 0.20, $1.20. Looks like it's about maybe 10 to 14 ticks. Call it 12. But please let me encourage you to, this is another thing I do in the room. I tell you, if you got a question, I'll answer it if I know the answer. And if I don't, then I'll just tell you, I don't know, because it doesn't do anybody any good for me to try to make something up. So I'll tell you this, I don't have hard stats and studies on crude. I go back, if I were you, and look and try to, determine what the range is. I could actually run a study and do it and maybe have an answer for you in a day or so. But right now, I would guesstimate it as being around 10 to 14, call it 12 ticks. The 30-minute reference bar trade again, I'll tell you that on average I've found it to be about 4 to 5 points in range from high to low in the S&P. That's the S&P. 4.5 is just sweet. Such a sweet just spot. And once the high or low is breached by a few ticks, call it on average about 3, then that's the trade direction that you want to be thinking. And there's 2 ways to do it. 1, say you got a 2 contract trade, right? Go ahead and start establishing a position. And then 2, get back behind it about 6 or 7 ticks with the limit to buy your second half, because your stop goes the other side of the bar. Join the room tonight. We call this Wednesday on the web. We do it a lot of, not every Wednesday, but a lot of Wednesdays. And there's the link to join us tonight at 7 p.m. That's at 7 to 9 actually, 7 to 9 p.m. Slides of this presentation to be up to Morgan. I'm cool with it. I have no problem with it. But he is recording it. He's recorded it. Some sort of indicator that tells when the stock market opened or closed. I'll tell you what I do is I just set my charts to the session, the data series, it's called in Ninja, to the session in which you're interested in evaluating. For instance, RTH, regular trading hours. That's from the cash bell to the cash close. The 9:30 strategy, I don't have time to go into it right now, I promise you. I wish I could or would. I would. I'll go into it with you tomorrow if you want to come and just call that number and ask somebody to get you in the room tomorrow or next couple days or something, or tomorrow or whatever. Or do that deal for the $299. I mean, you'll learn more than that in the first week. I promise you. I mean, that's a really, really, really good deal. Slide again. What comes with the $9.99? Yeah, Morgan's got that. Thank you. Somebody got it. Thank you. How many minutes do you hold a position for the first and second trades? Generally speaking, your targets on that first 3-minute trade are going to be met within the first 30 minutes. Generally speaking, you're going to wait a couple minutes for that 30-minute bar to trigger, and your target should be met within the next 30 minutes up until 9:30 at that point, wherein I have another trade for you at 9:30. What futures account would you recommend? Let's see, Colin again, I think. Colin's a good guy. His name is Colin Keena. He's Series 3 futures broker. Candlestick formations, I guess, subconsciously I probably do because I'm aware of them. Sort of, kind of would be the answer, honestly. I trade a bit differently, I do trade a bit differently, but, you can't unlearn something that you know what I mean? If it's there, it's there. If you see it, you see it. Even if you're not really trading that pattern specifically, you might factor that into your decision making a little bit, like, oh man, look at that, doji or, hammer or whatever have you, and you say, oh, that helps me with my decision on this. Yeah, call the 800 number. It's right there on the bottom of this thing, this 800-745. Call that number right there. It's 800. I'll type it in as well. Ask to speak to one of the consultants. I'm not sure who will answer, but ask to speak with one of the consultants. They'll get you in there. Upcoming live trading room session. Yes, sure, anytime. Yeah, just call that number and ask for how to get in one day or something, or really to come to. You're saying you can't come tonight? You mean at 7 o'clock tonight would be 3 o'clock your time? And Carl says missed a bunch of this video. It will be available on the Trading Pub website as soon as Morgan is able to get a published rendering of it. He'll post it to the website, so it will be available. And Rick, tell you what, do me a favor, please, and just call here, and ask somebody to help you. However, explain to them whatever it is you need. Somebody will help you. And then I'd like to encourage you guys to and join us tonight if you can. Tom Busby will be presenting for Wednesday on the Web for DTI. Again, he is founder and CEO of DTI, which was founded in 1996. That goes back quite a ways. And he's been trading for 30 plus years and has been at it, I mean hard, for 30-something years in the markets. And you'll enjoy hearing from Tom tonight. He's a wealth of knowledge, and if he sees something, he'll let you know. He's not scared to trade. If he sees it, he'll let you know. Take the offer. Mike Morgan would be the one to help you with that answer as far as take the offer right after the new year. I'll tell you what, I know that I'm sure I know you could do this. Go ahead and grab whichever offer it is you want, and we'll make your start date whenever you want. If you want to make the start date 1st of January, January 5th, or whatever, something like that, we can certainly do that. So go ahead and grab the offer. It's right there, the link, and then we'll make your start date just as soon as whatever date you tell me to make it. Can I make money from these two strategies? Okay, that's a performance thing that I cannot promise you. It'd be illegal, I think, of me to promise you that you can make money with these strategies. What I can tell you is, I will tell you this, they work for me, or I wouldn't be sharing it with you, okay? And here's what you do with it. You please take the information that I've given you. Please take the information I've given you. One, go back over first and review charts and say, you know, does this make sense? Ask yourself, answer the question for yourself. Does this make sense? You know, is it working on a chart? Do I see where it's working? And then if the answer is yes, then start putting them on in a sim account where it's not, you're not going to risk any money, and then start to build the confidence and the practice of, okay, I got the entry and I see the target. I got the entry, I see the target. I got the entry, whoops, I'm stopped out. What happened there? And go through it like that. That's the way I think that I should answer, and honestly the way that you should approach it. You know, a couple different trading rooms. So we have, oh, I'm glad you asked that question. At DTI, we actually have a couple different trading rooms. We have one where we're very, very focused, in fact, solely focused on options, like weekly options, and we have another that is solely devoted to trading, probably for Rick, that's solely devoted for trading at night. It's with a gentleman that's another 30-year veteran, plus year veteran actually, who trades in the after hours in the Globex. That's all he does. That's his job. He trades at night when most everybody's asleep. Then we have like the trade room that I'm talking about, where we trade all day. So the one that I'm sharing with you today is mine, the one where we trade during the cash market session around the U.S. cash markets, the U.S. equities. We trade stocks, futures, and options in that room. And there's some currency people in here, and I'll tell you, I'm very in tune with the euro, the yen, the Canadian dollar, and I guess the Australian dollar to some degree, because I watch the Aussie yen pair too. So if you're currency guys, you might want to consider this too, because I do very much like, we're short the yen right now. And I would like to be short the euro, but I can't get the thing to sit down. So it's driving me crazy, because I really would like to be short the euro, but we are short the yen. Very, very in tune with the euro and the Canadian and Australian dollars. Yeah, we do. We have a proprietary, I would say, approach approach, a proprietary approach. And if you ask me to, if you said, hey, Neil, just in a one-liner, what is it? How do you do it? I would say this. We trade on a key time of day, a first key time of day. Remember I said the times. The futures market open, the European cash market's open, the U.S. cash market's open, and the post-lunch time of day. And then we use the key numbers to trade during those key times of day. The key numbers we get from that homework session that's available to all the trade room members at 9 o'clock at night and available to you in the room at 9 o'clock in the morning. So you don't have to be there at 9 o'clock at night. You can just get the information at 9 in the morning or whatever. You don't have to be there. Risk reward, I definitely like at a minimum, absolute minimum, Rick, 2 to 1 reward to risk. At a minimum, that's a minimum. Realistically though, I know targets, and I'll say here's the target, and it may be 5 or 6 times the risk. I don't know, but at a minimum, even to put the trade on, it's got to be 2 to 1. Or I'm not going to put a trade on for 1 to 1. It's just like why bother? I mean, it's like you'd have to be addicted to the mouse or something just to click, just to hear it. I want reward for my risk is why. Okay, for that 9 a.m. trade, you're stopped below the 30-minute range, below the breakout bar. There are, Dave, let's see, how would I do this? I know one thing. Your stop has to be below the open and the midpoint for a long, for sure, okay? That's where I start. I start right there. If we're going to take that breakout trade on that 30-minute bar long, and we do trail stops, yes, then I'll say, look, guys, the midpoint's here, the open's here, the stop has to be back behind this, this midpoint and open. It's, that's 2 1/4 points worth of risk. Our target is 6 points. Anybody feels comfortable with a 2 1/4 point risk because we have to risk behind the open and the mid, then here's the trade. So, and then we do trail stops in order to try to potential. Alrighty. Do you need any indicators? No, it's price action. You don't need indicators. You need triggers and targets and stops is what you need. Triggers and targets and stops. An indicator that I do use, but you have, is the tick, the New York Stock Exchange tick. I do use that. They work on gaps, absolutely. Rick, what you find though for gaps is that it's a different kind of a scenario because there's 2 things that'll happen. Inside your open range, right? Open inside range, you have targets like yesterday's high and low and that kind of stuff. You have an outside range, you have targets like gap fill, stuff like that, right? So then you say, okay, well, what about gaps? What do you know about gaps? Well, then you have to run studies on gaps. You have to know how to trade gaps. 1 and 3 point gaps on S&Ps fill like 87% of the time. 4 and 5 point, they fill, 60 some odd, 70% of the time. You get out 8 and 10 points on a gap, no, they don't fill. They fill less than 50% of the time, but a half of that gap will fill just like a 1 and 3 point gap will fill to the completely. So you have to know how to trade. It's a different situation, but you have to know those stats. I trail the stops generally behind the pivots, like fractals, the fractal pivots. When you see like a little fractal that's presented as being a fractal low, and I've got a higher low than the last low, you got to hide behind that higher low than the last low. Tick charts, I use a bunch. I'm trying to get different time frames by using tick charts. I scale up in 4s, start with the famous fib number 144 times 4 is 576 times 4 is 2304. What you'll find is during normal trading activity on the S&P, 2304 tick chart takes about 3 to 5 minutes to complete, which means you're trading a tick chart, but you're also trading an average of both a 3 and a 5 minute chart. So I trade I chart various tick values on tick charts in order to get the smaller swings within the larger moves. So not to confuse Rick, the answer is no. The strategies do not only work on gaps. I'm saying that you have a different mindset as to what the targets are on an open inside versus open outside. It's like 87% of the time 1 to 3 point gaps. It's very, very high. 80, I can't remember exactly. It might be 84 or 87. It's very, very high. 1 to 3 point gaps fill. Very, very high. I consider the gap very, very likely to fill as long as it's at or below 5 points in width, away from the open, away from the prior session close. Alrighty. I see some more people giving up and kind of saying thanks and signing out. So I guess we're probably to a point where. And listen, I'm here to help. I mean, I'll help. I'll stay. But, we've been at it for probably, about an hour and 15 minutes. We probably need to kind of wrap it up and let you guys just use that link I gave you to join in tonight at 7 o'clock Central, U.S., 7 Central, U.S., Wednesday on the web. That'll be with Tom Busby. And he'll show you all about the software and the trade room and talk to you about, different trade setups and all kind of different stuff. And if you want to go ahead and get involved, grab one of those 2 links. There's 2 opportunities there, one for a quarter, or it's 3 months in the room, and one for a whole year with all kind of different stuff that comes with it, all these different these recordings and videos and the various products, and it's all kind of good stuff there. So the link to find the Globex high and low, there's no link. I mean, you're going to look inside your charts, look inside your chart, the continuous chart, a 24-hour chart, and look to see, what we do, our software gives it. If you're in the room, you're going to have it because the software points it out on a 30-minute chart. It's like literally a no-brainer. It's going to draw a magenta line for the high and the low at 8:30 in the morning of the European cash session and the U.S. cash session. You're going to have it. It's just right. It's a magenta line on the chart. It's right there for you. So you're going to have it. You're going to have it. It's going to be there for you. Okay, well, MetaTrader, you're not going to be able to chart S&Ps anyway. Because NFA is not approved MetaTrader for futures trading, and probably won't ever. But Rick, what you do is email that guy I gave you. Email Colin. Tell him to give you a demo account. It's free. It's a demo. And it'll come with charting. So you'll have the charting and data. It'll come with free charting and data. Can't get better, any better than that. So you'll have S&P quotes, Dow quotes, NASDAQ quotes, all the quotes, bonds, gold, euro, all the stuff, and charting. And it's free. And can't beat that. Okay, the link for tonight, I'll post it again, and then I'll sign off and hand it over to Mr. Morgan, and thank you all, one, for the interaction. It is what makes a successful webinar. Without the questions, I promise you this would be boring for everyone. So thanks for the interaction, for the questions. I appreciate it, and I Also, very much appreciate Morgan inviting me and having the opportunity to be here. It's always enjoyed. Thank you.
Great. Thank you, Neil. We appreciate you taking the time to be with us today, and we'll get a copy of this recording posted on our website very soon, and we hope you all have a wonderful night. Again, I'll type in those 2 links if you guys want to trade with Neil over the next year. You can follow them there. Thanks, everyone. Brett, note we will get you a recording of this session, which covers what Neil taught today. All right, everyone. Thanks. We appreciate you guys taking the time to be with us.